Debt can feel like quicksand, slowly pulling you down while you think you are standing still. And in 2025, that quicksand is getting deeper. Because while inflation, interest rates, and living costs rise, lenders have gotten smarter and more dangerous. They've designed traps so subtle that millions of people walk into them every single day. And what's worse? Most people think they are making smart financial decisions when they fall for them. So today, let's talk about the 5 biggest debt traps you must avoid in 2025. If you want to keep your money, your freedom, and your peace of mind. Let's start with the first one. Debt trap number 1. Buy now, pay later. Sounds convenient, right? You see something you like, a new phone, sneakers, furniture, and the app says, split it into 4 easy payments. No interest. No credit check. No problem. But here's the truth. Buy now, pay later is psychological warfare. It tricks your brain into believing you are spending less than you actually are. You tell yourself, it's only $50 a month. But then you do it again and again and again. Before you know it, you're juggling 10 different payments. And your next paycheck is already gone before it even hits your account. What's worse? Many of these services report missed payments to credit bureaus now. That means one slip, one missed deadline, and your credit score takes a hit. In 2025, BNPL companies like Afterpay, Klarna, and Affirm are expanding aggressively. They're not just for shopping anymore. They're being used for vacations, groceries, even rent. So here's the rule. If you can't buy it in full, don't buy it at all. Because delayed payments mean delayed pain, and that pain always shows up. Debt trap number 2. Credit card minimum payments. Your statement arrives and it says, minimum payment due, $75. You breathe a sigh of relief. You think, perfect, I can afford that. But what you don't realize is that $75 barely covers your interest. You're paying the bank just enough to keep you in debt forever. Here's a scary fact. If you owe $5,000 on a card with 20% interest and only pay the minimum, it can take you over 20 years to pay it off. And you will pay double or even triple the amount in interest. In 2025, credit card debt in the U.S. hit an all-time high over $1.3 trillion. Why? Because people treat credit like free money. They forget that every swipe is a mini loan. And banks love it when you only pay the minimum. That's how they make billions. The trick? Never look at the minimum due. Look at the total balance. Then make a plan to pay it off as fast as possible. Credit cards can build wealth, but only if you use them as tools, not traps. Debt trap number 3. The lifestyle upgrade. You get a raise. You feel great. And naturally, you upgrade your lifestyle. You move to a nicer apartment. You buy a new car. You start dining out more. You tell yourself, I deserve this. And maybe you do. But here's the dangerous part. When your lifestyle grows as fast as your income, you never actually get ahead. It's called lifestyle inflation, and it's one of the most common debt traps in America. You end up with bigger expenses, higher bills, and new financial commitments. And before you know it, you are living paycheck to paycheck again, just at a more expensive level. In 2025, social media has made this trap even worse. Everyone's flexing. New cars, new homes, new vacations. But behind the curtain, many of them are drowning in debt. Remember this. Wealth isn't about what you show, it's about what you keep. If your income rises, do not raise your lifestyle immediately. Raise your savings. Raise your investments. Raise your future freedom. Debt trap number 4. Long-term car loans. Cars used to be a 3-year purchase. Now, people are financing them for 7 or even 8 years. Why? Because it makes expensive cars look affordable. That shiny SUV might cost $60,000. But the dealer says, only $799 a month. You sign the papers. Drive off happy. And then, 3 years later, your car has lost half its value, but you still owe tens of thousands. That's called negative equity, and it's financial poison. You can't sell the car. You can't trade it in. You're stuck paying for something that's worth less than the loan. In the year 2025, car prices are still inflated from the supply chain crisis. And interest rates on auto loans are the highest they have been in over a decade. So what is the smart move? Buy used. Finance for the shortest term possible. And never let a car dealer decide what affordable means for you. Because the truth is, cars are not investments. They're expenses that lose value every single day. Debt trap number 5. Student loan extensions. Student loans were meant to help people build their future. But now, they have become a lifelong burden for millions. And here's the trap. Loan servicers want you to extend your payments. They will say, just lower your monthly amount. It will make things easier. And sure, it might feel easier today. But what they don't tell you is this. Every time you extend your loan, you pay thousands more in interest over time. You might go from a 10-year plan to a 25-year plan. That's 15 extra years of payments and potentially tens of thousands in extra interest. In 2025, with the cost of education still rising, student loans are the new mortgage for young Americans. But you don't have to be trapped. Focus on aggressively paying them off once your income rises. Avoid income-based repayment plans unless absolutely necessary. And never treat student loans as good debt. Debt is debt, and all of it steals from your future. Now, let's talk about the bigger picture. The truth is, these traps aren't just about money. They're about control. When you are in debt, you lose freedom. You lose choices. You work for the bank, not yourself. And that's exactly how the system is designed. In 2025, debt has become a way of life for most people. Mortgages, car loans, credit cards, buy now, pay later apps, it's all normal now. But normal doesn't mean smart. If you want to win financially, you need to think differently. You need to stop chasing comfort and start chasing control. Because the moment you stop owing everyone else, you finally start owning your future. Here's how you escape the trap for good. First, track every debt you owe. Write it down. Balances, interest rates, due dates. You can't fight what you don't see. Second, create a debt attack plan. Start with the highest interest rate first. That's the one hurting you the most. Put every extra dollar toward it until it is gone. Third, stop adding new debt. Cut up unnecessary cards. Cancel buy now, pay later accounts. Say no to lifestyle upgrades until your finances are stable. And finally, build an emergency fund. Because most people fall into debt not from shopping, but from being unprepared when life happens. A job loss. A medical bill. A car repair. When you have cash saved, those moments don't break you. Freedom doesn't come from earning more. It comes from needing less. And when you stop borrowing for everything, you start owning your peace of mind. So in 2025, while the world drowns in debt, make this your mission. Live below your means. Invest above your expectations. And never, ever trade your financial freedom for temporary comfort. Because debt might promise convenience today, but it always demands a price tomorrow. You have two choices. Be the borrower or be the owner. And the owners? They're the ones building real wealth, quietly, patiently, and debt-free. So ask yourself, which side do you want to be on?